Speaking today with Nate Donnay, who's Director of Dairy Market Insight at INTL FCStone, a very well-respected dairy analyst. Nate, we're going to talk a little bit about dairy production today. We're obviously in an unusual situation. Production was headed up in January and February. Your analysis shows that even when it was up again in March, and then obviously a lot has changed. Kind of where are we at this point in the production side of things?
Sure. We started a herd expansion, an increase in the number of cows that are being milked here in the U.S. way back in July and August of last year. And typically these expansions last about 18 months. So the normal cycle would have the herd expanding and milk production running 1.5% to 2% above year-ago levels here through most of 2020. But with the collapse in demand due to the coronavirus outbreak and the drop in dairy prices, it looks like milk production is going to slow down rapidly in coming months.
We've seen information presented by various veterinarians and nutritionists who acknowledge that after 30 years of trying to help people increase production per cow, they're now in the unusual and maybe even uncomfortable position of advising on how to scale back a bit. What are the kind of the industry goals as you see them, or what's happening, and how is that going to impact our production as we move farther into the year?
Right. With the drop in demand that we've had, some milk has had to be dumped across the country. And to avoid further dumping of milk and to try to bring the market into some level of balance, major cooperatives, milk buyers, processors are asking the farmers to reduce milk production. And not just asking, but they're setting up payment programs that make it unprofitable to produce above the requested level by the cooperatives and the milk buyers. So that they're asking for anywhere from a 5 to a 10% cutback in milk production from the levels of milk that were being produced in March. The farmers can't kill cows that fast to get that type of reduction in milk production. The adjustment on the production side will have to come from lower production per cow, and they'll likely do that by adjusting feed rations. Like you said, the long-term trend for production per cow is growth. We rarely see production per cow drop below year-ago levels. And when we do, it's usually a short-lived thing driven by the weather or maybe very high feed cost or a feed quality problem. So we don't have a real good analog to look back at and say, okay, in the past when farmers faced this type of situation, they were able to reduce production per cow by X percentage over the course of 3 months. We just don't have that comparison to go back and look at. So it's difficult to say how quickly the supply side can respond. But we do know anecdotally that the nutritionists are making the adjustments. Farmers are cutting the rations and cutting milk production, and we're hearing from some cooperatives that it's noticeable in the number of tankers that are coming into the plants. So the supply side is certainly adjusting here short term. It's just difficult to say how much it's going to adjust. We think total U.S. milk production could drop slightly below year-ago levels in May, and maybe be down as much as 0.5% to 0.7, 0.8% by the time we get to July.
You would have a very unique crystal ball if you were able to look out for the rest of the year and see how demand is going to evolve and therefore how production might follow. I'll give you a chance to take a stab at that if you want to, but I don't think anybody would blame you if you said, well, let's stick to May and June and we'll see what happens then.
You know, along with these short-term adjustments to production per cow, we have pushed margins down to record low levels. It looks like farm gate margins are going to be pretty similar to 2009, and it's going to cause significant financial stress for the farmers. And even though we won't get a big supply side adjustment from reduced cow numbers short term, this collapse in pricing should turn around that expansion in the herd. We'll have fewer cows going into the fall. That will hold back milk production growth a bit. and hopefully the demand side is better by then, and it should give us some upside. But right now the outlook is tremendously uncertain, much more uncertain than usual.
Compare or connect the progress that we might make in getting past the coronavirus pandemic versus a restoration of what I'll call regular milk markets? Or is that just too murky at this point to really make any helpful statements?
It's just very murky at this point. I think to get the market back in balance, we need to see food service sales better than 20% below year ago levels, along with the government announced purchases of dairy products and along with continued decent retail sales. That should be enough to really get the market moving higher again. How long it takes to get to that point is still a big question mark. We're still sitting here at food service down 50 to 60% from year ago levels in late April.
Well, Nate, we really appreciate this snapshot at this point. And as we all know, things change, if not weekly, almost daily sometimes. So we'll stay in touch with you, and we appreciate your insights. Thanks for sharing it with us. This is Joel Hastings for DairyBusiness.com.